Hello, Jim here. Selling options is a great way to make some extra income, and when you pair it with interest and dividends and stock appreciation or ETF appreciation, it can be a serious amount of money. Today, I want to talk about how I did last month. I made about 30 trades, and it wasn't one of my best months, it wasn't one of my worst, but I'll go into detail. I'll also share with you how I did overall in my different accounts. So stay tuned. I think it's going to be well worth your while. Okay, let's jump right in. I do want to say a few words about the market. I'll keep it fairly brief. We've been having up and up weeks. The market seems to hit new highs or was hitting new highs. This week's kind of turned around. We're giving up some of the gains. Monday was down. Tuesday was kind of a mixed day. And now Wednesday looks like we're down again. And that's kind of a good thing. We don't want the market to hit crazy highs. We do want corrections from time to time. It keeps it being more of a healthy market, at least my opinion, and it may only be worth 2 cents. I do think, just to add one more comment, I do think the Fed's going to cut rates in the middle of November, and I do believe it'll be a 1/4 point. I'm still not thinking it's going to be a 1/2 point. I think they're going to do 2 more 1/4 points, and then they'll probably be done. At least that's what I'm thinking. But let's jump into the main stuff. In pretty much all my videos, I talk about picking good companies, and that price does matter. So finding companies, looking at their debt, making sure their debt to equity ratio is relatively low. I like below 50%, meaning for every dollar of debt they have $2 of equity. I also like companies who have return on, or good ROI, return on investment, or return on assets. I also like to see good return on assets. And then I like companies who also pay dividends. I like both value companies and growth companies. If it's a growth company, I like to see that they're growing in a healthy manner, not taking crazy risks. One piece that I haven't talked about as much recently is I also like to see good management. I'm always concerned when there's a management change, a CEO leaves or CFO leaves, so a management team that's been there for a while and seems to be making the right decisions is also critical. And if they're paying a dividend, it's not so much how big the yield is for the dividend. It's more, can they cover the dividend? Is their payout ratio low? Do they have plenty of funds to continue paying dividends? I've seen a lot of companies cut dividends over the last couple of years, probably because I've been watching more with trading options. And I know Intel cut dividends, and I believe there are a few others that did too. So it isn't a given that they're not going to do that. That's where looking at payout ratios, and if the company's performing well and doing well, then you're safer that they're not going to make those kind of cuts to the dividend. So I like to mention that mainly because it's kind of the key. If you pick the right companies and ETFs and you pick them at a good price, you've won probably 2/3 of the game. So today I wanted to talk about, since it's a monthly review of September, I wanted to talk about all the different cash flows. So I sell premium from both calls and puts, and doing that with both calls and puts gives you a little bit of a better way of collecting the premium, meaning if the market's going way up, then it's a little bit harder to sell the calls. And then vice versa, if the market's going down big time, it's a little bit harder to sell the puts. You kind of want more of a sideways market, but by having both calls and puts, you can benefit pretty much either way the market goes. So if it's going up really high, then your puts become very profitable and you can close them. And if the market's taking a dive, same thing with your calls. You can potentially close your calls, or you might even be able to roll them down and pick up more premium. I ended up doing that a lot with NVIDIA. So if they drop back into the 110s or 120s, I have a lot of 145 calls that I could roll down to like the 125, 130 range and bring in even more premium. So having a balance of calls and puts is really important, I think. And then now with interest rates being higher, I do most of my put selling within Fidelity, and I earn about 4.6% on the cash that I have available for my puts. So, and that ends up being quite a bit because I do have a lot of cash in my accounts, in my IRA and Roth, I have over 500,000 now. I believe it's like 520. And a good half of that is still in cash. And I plan to continue that. I do think the market's going to have a correction at some point. And when it does or has a big drop, I like to find some bargains. I like to find companies that potentially, are at their 52-week lows that I can pick up at a really good price, if they're anywhere near their 52-week low. And then for a lot of my puts, when I sell them, I like to go 10% below the price, or around 10%, and pick them up even cheaper and earn some premium along the way. So you end up, by trading options and being an investor like myself, you end up bringing in a lot of different income streams. I look at the call premium as one, put premium as another, the interest is again another, dividends, and then the appreciation on stock. I forget to talk about the appreciation on stock. Like my Coca-Cola, I've had for so many years, my cost basis is really low. I have a ton of appreciation. Even in my NVIDIA that I've had for 4 or 5 years, its cost basis is outrageously low. I think I've got something like a 2,000% return since I've bought those. And it was before all the hype. I bought them 6-7 years ago. So just wanted to talk about that. For me, I'm more of an investor trader. I started out as an income investor where I was primarily looking at value companies and, living off the dividends. Now I kind of define myself as a trader investor. So I still like the dividends. I still like the interest. I still like value companies, but I also like to trade options. But it's not my bread. It's not my bread and butter. It's just extra icing on the cake. But it can be significant. Now I have in my memberships, and if you want to learn more about my memberships, take a look down below in the description. You'll be able to click through to my memberships on Patreon. But I have a lot of just true traders. They're not really investors. They just want to make trades, earn some income, which is perfectly okay. It's just a different way of doing it. I describe those as pure traders. They don't really want to own the stock. They just want to make some quick income, and they can do quite well. I mean, and sometimes some of them seem to be even doing better than, parts of the market. I don't know if they're beating the S&P, but some of them might be. I wouldn't be surprised. Then I originally was a pure investor, and I look at that as kind of a different type of person. So a pure trader may primarily look at technicals. They might not really worry about fundamentals. Where an investor, where I started as an investor, I'm more interested in the fundamentals than the technicals. Like I like to use the Bollinger Bands to help me make decisions about making trades, but I don't look at technicals as much as I do fundamentals. I want good companies over long periods of time, and I want them to appreciate significantly. Now, do I make mistakes? I do, like anyone else. I've picked some dogs, Lumen Technologies, Big Lots. Now Polaris is going through a rough spot. I still like Polaris. I do think it's going to recover over time, but they missed earnings pretty big yesterday, and it just got hammered. And then the new breed is this investor trader, and I've had probably a majority of my members are like what I am. They still invest, they still want appreciation, they still want the dividends, but then they also want to trade options. And then they do it slightly with a mix. So I also will trade IWM, and I only trade it to earn income. I don't trade it to own IWM. That might change. If I got assigned, I wouldn't be too upset. I can definitely handle an assignment of IWM. And at that point, I would probably sell covered calls fairly close to the money and run it like the wheel. So just wanted to mention that. I find it interesting that, people have different goals. So if you're just a pure trader, you're just a pure investor, or an investor and trader, your goals will be different. So for me, I like to set how much I'm making on a monthly basis. And then I'd like to define also the growth of my investments and look at ROI, how each particular trade is doing or position is doing. Whereas if you're just a trader, you just care about the cash, how much, what's the size, how much cash do you have, have you gone from a $300,000 to a $350,000 account? But I also encourage you, if you're doing that, to also keep in mind how much cash you have. So just kind of wanted to mention that. It's something we talked about in my last Trader Club meeting, which was this past Sunday. We had a pretty lively discussion, and then I taped it and I put it out there for the investor club members so they could actually review it and take a look. And we do that every other week, every other Sunday. So that being said, let's jump into a review of my trades for September. I'll go into a bit of detail, and some of this stuff I'll talk about again. So stay tuned. I think you're going to find it well worth your time. Okay, here's my planning worksheet from September. I put in the totals for it for the whole month. September was kind of a slower month for me. I didn't do as many trades. Part of it was because of Labor Day vacation, and I believe I took a couple days off too where I didn't trade. So I did more like 30 trades where I typically do around 40 or 41. I'm not going to go into each of these trades. One thing I do find interesting is I trade in a lot of different companies. I don't have, one particular company I primarily trade in. I like to trade in a lot of different companies. And you can see that just by the symbols. My first one was Airbnb, and this is a covered call. It was assigned to me back in, I believe, August or maybe July. And now I'm selling covered calls and bringing in some pretty good cash. I brought in for this trade $537, and this is like a 12% return. And I rolled it from 11.15 or to 11.15 from 10.18. So a good trade. Like I said, Airbnb was assigned to me. CLS is another one. I closed them. They got pretty profitable. Since then, I have opened up a new position in CLS. NVIDIA is another one I closed. It was vertical put credit spread 92.82 that became very profitable, and I closed it. I have a Polaris. This is the Polaris that I was talking about. Yesterday, it got hammered, dropped into the low 70s. And this is the only one that's in my Schwab account. This was 920.85.65. At the time, it was $82. I rolled it out to 12.20, and I brought in a lot of cash since I've been trading Polaris since the beginning of the year. It might actually bridged. I might have made the first trade last year, but I brought in almost $1,900. I brought $298 in for this one trade, rolling it to 12.20. Actually, 527.21. So this has bridged a number of years. So it's never been assigned to me. I currently don't. Well, I think I do own 100 shares of Polaris in my Fidelity, and I believe it's got like a cost basis of 85. This is Broadcom. This was a roll of vertical put credit spread, 145, 135. It was 137. I rolled it again. I recently closed this, but I also brought in some good cash, 287.92. The required capital, which is just since this was a vertical put credit spread, it's just the spread times 100 times the number of contracts minus this 287.92. So that's how I come up with 1712. And then the yearly ROI is like 142%. So it was one of my better trades. Now, if this got assigned to me, it would be pretty costly because it would be about $29,000. But again, I have plenty of cash to cover any of these to get assigned. But so far, I think Broadcom, I believe I just recently closed it in October. UPS, this is another covered call that I rolled, 130. It also got assigned to me just with same time Airbnb. At that time, it was 125.82. I rolled it, and I roll it up. I believe I rolled it. No, I kept it the same strike at 130. And I brought in 507. So, and it's like a 10% yearly just on the covered call, and it pays a 5% dividend. So it's worked out really well. The next is DocuSign. This I just closed. It did really well. It's gone up big time recently. So I want to make another trade on it before too long, but I believe it went up over 70. So I might look to make a trade once it comes down. This is ASO. This is Academy Sports. If you've listened to any of my previous videos, it's one of my favorite places to shop. I end up buying a lot of t-shirts there. I bought 3 t-shirts literally 2 days ago. And I buy some other things that can't really be discussed on this channel. So you can probably figure out what that probably is. And 57.50 cash secured put. And I still have this. I rolled this out to 117.25. and brought in 427.72, which is like a 10, almost 11% return. But I brought in nearly $1,500 just on Academy Sports. It does have pretty good premium. Next is Zoom. I've been dealing with Zoom for probably the whole time I've been selling cash secured puts. I like Zoom. They have no debt. They have pretty good profitability, and they seem to beat earnings. This was a vertical put credit spread, and I rolled it. So you see most of these are rolls, and I rolled it and kept the same strikes, brought in 255. So this is like almost like an 87% return. Again, it's the spread. So $10 spread times 2, so $20 times 100, which is 2,000 for the spread, minus the premium. So that's the capital that's involved. Now, again, if it was assigned to me, it would be more like 13,000, whatever, minus whatever premium I brought in. And I do own some Zoom. I think I own 200 shares of Zoom. Qualcomm, another roll. I did this on September 9th, 150, 140. This stayed out of the money the whole time. I believe it's like 180 now or 170. It did come down recently with some of the chip makers came down. And it's a good return, almost 118. So I made 224. I've made 521 since I started the trade. So the required capital is 1775. It's like 118% return. I believe it expired. It expired recently. I believe, was that 10? Yeah, 1018. This one did expire. I haven't opened a new one. I probably will. This is one some of you will probably disagree with, but I feel like Palantir's gone nuts with its pricing. So I purchased the put. This may be a total loss. It's probably a learning experience for me. I still have it for 11.15.24. I just, with 130, 140 PE, I just believe that they were overpriced and that they would come down big time. But so far, it's proven me wrong. I think I might end up losing this. I think I paid, $268.39. So I may lose all of that, depending on what happens with Palantir. They just seem to just go up and up and up. Momentum completely. People really don't care what the price is. They're willing to spend whatever. You can also say that kind of with NVIDIA. NVIDIA, this is vertical put credit spread at 102.92. I believe I recently closed this one too. I rolled it out to 11.15 and they went, I believe NVIDIA is like 145 right now. So I think I closed this one in October, but it's very profitable, 115. Again, the required capital was 1655. So I've been very successful with trading NVIDIA. There is an argument to stick with the big boys and stay away from some of these other, like Polaris, and staying away from some of the other companies. Squares also, I've done quite well with it. This is a cash secured put. If you guys followed my recent video where I did, I'm running the wheel. This is a trade I actually did before that, but I am including it in my wheel calculation. So when I made the trade, I brought in 272. The required capital is 11,727. Was this 2 contracts? Yeah, 2 contracts. So now I believe I did the one at 65 too. So I've got 3 cash secured puts on Square, which is a bit much. So yeah, I may look to get out of one of these positions depending on what happens. Currently, Square went up to as high as 74, so I probably could close this before too long. And here's one of the I did a trade originally on Chewy, and it was probably one of my most profitable trades. And I closed it early too, which in my previous calculation, I believe it was almost a 400% return, especially after I closed it. And here's IWM. I did an iron condor. This is the Russell 2000. I did it with 225, 235, and 185, 175 for the put side. So these are called wings. So the iron condor on the call side, the 225, 235, is the call wing, and then the put wing is the 185, 175. Now they currently are putting this a little bit at risk. I believe it got as high it got a little bit in the money on the call side. Now it's dropped back down to around 220. And being that it's in, no, actually I closed these. So yeah, I was able to get out of these. I've opened up another one, which has, Russell 2000, the IWM, it continues to go up. But you can see I closed quite a bit of positions. I originally had between 90 and 95 positions. I really like having around 80. So I'm being a lot more cognizant about closing. So I closed both of these, and you can see I'm still being pretty cheap with closing them. I paid $14 and $12 to close them. And the previous one that I closed, which was the DocuSign, I paid $14. So I'm probably going to start spending a little bit more and be willing to close them with, when they're a little bit more expensive. Next is Williams-Sonoma. I believe they took a big dive yesterday too. They might be below 140, but it's also been very profitable. I rolled it, kept the same strikes, 140, 130. And I questioned when I did this, should I have gone down because the premium was pretty good, but I kept it at the same level. I wouldn't mind owning Williams-Sonoma. I currently don't own any of them. And this was also a 172% return. Cost of capital was $17.50. And again, this, if they got assigned to me, it would cost me $28,000 minus any premium that I already brought in. Meaning if it got assigned to me early, I would probably, and what I've done in a lot of cases, is let the assignment occur. Then if the 130, I would sell the long puts, especially if I wanted to own it. And then my cost basis would be significantly lower than, 140. I did this with Airbnb and UPS, and my cost basis, I ended up picking up a pretty good amount of premium from those long puts. Some people might close, but again, when I go into any of these trades, I want to own the company. There's not a company here that I've gone over that I don't want to own. And then I have Google. I've done a shielded wheel call roll a while back. And that's just, you buy 100 shares, you sell a covered call, but then you also do a vertical put credit spread at the same time. I did a video on this a while ago. So this is related to the 100 shares I bought. I think my cost basis is like right around 170, 175. And I've made pretty good premium rolling this covered call. I rolled it to 1220, upped it to 180, and I brought in not quite as much premium, 125. I think it started to, I believe it was in the money. I believe it got, no, I lowered it. It went way down. Google's been hit hard recently because of, the government going after them. But I still think they're reasonably priced. So yeah, I brought it down from 195 to 180 because I believe they dropped in like to 162 or 160 or something like that. Next is Dell. This is another one that instead of letting it get assigned, I sold the long put, and then I rolled it as a cash secured put. So I did something slightly different, but the fact that it was originally a vertical put credit spread, I was able to roll it, make some good premium at that time. I believe I did that probably in July, but now I have it just as a cash secured put that I'm rolling, and I rolled it from 1018 to 1115, kept the same strike, and brought in some pretty good premium. It's had really good premium, 385.25, which is like a 12% return. I did, which isn't bad for a cash secured put. And then I believe Dell's gone up to like 130, so I might even be able to close this. It's one of those instances, maybe I should have let it be assigned to me because I would have owned it around 110, 112, and now Dell is 130. So sometimes, your best play isn't necessarily not, avoiding assignment. Sometimes it makes more sense to allow assignment. I don't know why I didn't put one there. I can put one there now. And then AMD, actually it might be two. I think there's two contracts there. AMD is another one I rolled. It's a vertical put credit spread, 140, 125. You might say, well, why'd you do 140, 120? That was a mistake. I was looking at, I was moving it, trying to see, well, which particular long put would be worthwhile, and somehow I just picked the wrong put. And I've left it like that. So I rolled it. Let's see, where did I roll it to? To 11.15 and brought in another $270. This is another one. It's recently dropped. It's getting pretty close. I believe it's in the 150s. So this may come into play again. It may be, come close to the money. Here's two more that I closed. So I closed Delta Airlines. This was a vertical put credit spread, and I closed one of those credit spreads for Google. And again, you can see that I'm cheap. I don't know why that's 275. Am I in the right place? Oh, roll close. So I rolled this and this position is closed. So I just did that to track it, but I made 275 and rolling it to 1018. But then I rolled it again, so I didn't want to not show the premium. So the previous trade we looked at with Google is related to that. So it's still an active position. It's just this one in this spreadsheet is closed. And in the Delta Airlines, I paid, let's see, what did I pay? Sorry for going back and forth, guys. $9. So I literally closed it for $9. So like I said before, I need to stop being cheap and start closing more of these when it's going to cost me a little bit more. Now Airbnb, another covered call roll, and 125, and I rolled it up to 130 and took it out to March 21st. A lot of times will roll 6 months out. This brought in a lot of cash, almost 667, so almost 670. And it's like a 5.72% return, which to me is like an outrageously good dividend. And since then, I think Airbnb has continued to go up. It may be like 133, 134. I might need to roll it again. This is another one of my problem children, Polaris and ACLS. This is a chip maker related to the EV market, and they've been hammered, but they still have good numbers. It's almost like people are shorting them and causing them to go down. I believe they've gone under 90. So this is probably going to get assigned to me, which my inclination is to sell the long puts, allow assignment, then sell a covered call. Last time I did the calculations, it would be pretty close to profitable at that time because I believe, we can come out here. I believe it would get it into the high 90s, and selling the long put also would bring in quite a bit. And then selling a call around 110 also would bring in some pretty good premium. So this was, to roll it, I earned 98 cents. So I rolled it just to buy myself more time because at the time I believe it was in the money, 96.98. So I bought myself a little bit more time. So next I've got T. Rowe Price. This was a new vertical put credit spread, 105.95. And since I've done this one, it expired last week. TSM, this is Taiwan Semiconductor. I also closed it. I'd like to make another trade on them, but they've gone way up. I believe they may be in the high 170s. But I closed it for pretty cheap too. And I put it down. For some reason I didn't put that down, but I believe it. No, it had expired. Even though I wrote closed, I believe it expired. Next is Google, another roll. This is a vertical put credit spread, 155, 145. And I rolled it, kept the same strikes, and I brought in another $236, 92% return. So we're coming to the end of NVIDIA. This is another iron condor that I did. This is a new trade. And I did on the call side 145, 155, and on the put side 95.85. So it's recently come under pressure because NVIDIA's gone up. It got really, I think it hit 145 recently. Question is, what does it do today? So I'm probably going to call Fidelity. I'm going to ask them to break it into its wings so I can roll each individual wing. You have to do that with Fidelity. Schwab, you don't need to do that. You can trade each individual leg or wing. But Fidelity, at least I have to make the call, and it's in my retirement account. So I don't know. It may be different in a brokerage versus a retirement account. But this was a 13 delta on both sides. So I tried to do a 13 delta at that time. NVIDIA was 115. So a lot of times I'll do less risk on the call side, mainly because I feel like the call side's a little bit riskier. And I brought in 480.84. This is like 131% return. The capital required is 25.19, and I did 3 contracts, so I also did a little bit more risk with it too. And then another NVIDIA covered call roll that I did. This was in my regular Schwab account. I rolled it just out from November to December, brought in some pretty good premium. I mean, I believe NVIDIA just pays the best premium out there. So this was like a really high return because that's my cost basis, $652 for those 150 shares. So I was looking to buy 50 more, and I missed my opportunity. I'm hoping I get another opportunity to buy another 100 shares. Closer to 110 is what I'm hoping. That's why that return is so high. My cost basis is so low on it. And then GCT is a roll. This is GigaCloud. They got down to as low as, they might have gone under 20, and they did not get assigned to me. And I rolled them out to 117.25, kept it at 25, and I brought in a lot of cash with them, almost $1,500 for 2 contracts, so you're talking almost $750. So my cost basis would be pretty close to 17. Brought in 317 and a pretty good return. This is also a cash secured put, so one of my few cash secured puts. And that's really high for a cash secured put. And then Twillo, this is the cash secured put 2 that I did I also did I rolled CLS again, and it was 45. And it also brings in good money. It's pretty far out of the money right now. I might be able to close it here soon, but this was 248. It brought in 21% return. I really like CLS. It's one of my favorites currently. This is a Twillo. This is the cash secured put. I believe this is the one I did for the wheel. It might not be actually 1018. I might have done, I rolled it to 1115. So this is before the wheel. I have another one that I did for the wheel that I talked about in a recent video. But I brought in 195, the cost basis or the required capital, which is the full amount. So when you're looking at a cash secured put, the required capital is the full amount of the stock minus the premium. And that's where I'm coming up with that. And then it's a 24% return. So we're almost done. Hang in there, guys. So here, Google, 930. This was another vertical put credit spread. 160, 150 originally on 1018 expiring. And I believe Google is currently at 165. I rolled it to 11.1, trying to avoid earnings. And I brought in some pretty good premium. So I typically don't look at weeklies, but this time I did. And I brought in 224. And the return is so high because I only rolled it for a couple weeks out. I think the total number of days were 32 days. So I rolled it 32 days. One of my few exceptions that I didn't do monthly. So those are all the different trades. Now, if you come down here, these are all my other trades. This is, like I said, my planning worksheet that I provide to my membership. So if you're in my membership, I'll also upload this spreadsheet when I post this video to the membership. I typically will post the video again to Patreon and then also to Discord, and then I'll upload the spreadsheet so people can play with it, and I've actually had people find I made mistakes. Pretty rare though, but so I did 30 trades. They were mostly only 5 covered calls. You're talking 16 cash secured puts, 17 vertical put credit spreads, and I did do 2 iron condors. And most of them were rolls. I did very few new trades, and I closed quite a bit. Like I said, my end result was more like 80 open positions at the end of September. So my average premium was 247.44. That's based on the number of trades that I did, around 30. I brought in 74.23. So I'm not, I've had 9,000 months. This is probably recently, it's not my lowest. If you go back, I definitely had lower months earlier in the year, but required capital. Now, if you were looking Well, if everything got assigned at once, how much cash would he need? It'd probably be more like 387. And in return is 3.96%. That's based on this. That's just this divided by this, and that's what you would bring in. Now, if you look at the different accounts, so I broke it out by the accounts. I didn't do much with my brokerage, my Schwab brokerage. I only brought in 607 in cash, which isn't a whole lot monthly. So monthly, I have about 577 in those accounts. So 607 divided by 577,000 is only 11%, so only 1.26%. But this is radically low. Usually it's more like 2,000 to 3,000. It's usually like 0.5%. And again, it's mostly because I'm fully invested in my regular brokerages. That's where I have my Coca-Cola, my Procter and Gamble, my Citigroup, my eBay, a lot of those companies like that. In my Fidelity IRA, where I do almost all my puts, I have only one put in my Schwab accounts. I brought in 6816. This is like 1.39% based on the total value of my two different accounts, which again is like at that time was like 480, 490. And it turns into almost like a 16.71% yearly return. So definitely doing better in my Fidelity IRA. The other reason I'm not doing as much in my Schwab is because I'm pulling a lot of cash out of that for this real estate deal that I'm working on. We bought the land. The kit's been delivered. The septic tank's been put in. I believe we're on track to have a well dug soon. And then the kit will probably be put up hopefully next month, if not December. I'm hoping next month. It's the building permit's been a little bit of a nightmare. And then total premium, 74.23. That's just these two. And then if you look at all my accounts, which is a little bit over $1 million, it's $1.3 million, almost $1.4 million. And on a yearly basis, that's like 8.59%. So that seems not the greatest, but again, that doesn't include dividends, interest, or any appreciation. That's just based on the premium coming in. Interest and dividends were $36.52. This was taken both from my Schwab accounts and my Fidelity. So the total was $11,075, which again, if you do that based on, my total value of my accounts, that's like 12.82% just for dividends, interest, and then premium. And then, for appreciation, it's probably another 6 or 7% depending. But that, again, if you have questions or if you don't believe I calculated this correct, add a comment. I do like to respond to my comments, and I usually do within 24 to 48 hours. So notes, fewest number of trades due to holidays and vacations. Typical month is more like 40 trades. This month I did more like 30, 31, something like that. And ended with around 80 open positions, which I believe I went into the month with 90, and now I'm at 80. And I think in October, we're coming to the end of October within another week, I think I'm back close to like 83 or 84 positions. And that's been one of my goals, is to close more. You definitely will do better if you close your positions and then later open it. We talk about rolling, but rolling is just closing your existing position and opening a new one and bringing in enough premium to cover the cost of closing your existing position. So if you close the position and then open it at the most advantageous time, you potentially will do better. Plus, you could potentially make more trades on that particular security than if you're just rolling. So something to keep in mind. So that's it. That's what I wanted to show you guys. Let me know what you think. As always, if you have questions or concerns or comments, like I said before, I typically try to answer almost all my comments. And as always, thanks for joining me and taking the time to watch the video. Look forward to seeing you next time.